Other stock we're looking at is Samvardhan Motherson International reported another strong set of numbers. Revenue growth of 27%, operating profit margins expanded as well. In fact, the EBITDA, the management said, is driven by operating efficiency, softening of raw material costs and softening of energy prices. Pankaj Mittal, the CEO, and Kunal Malani, the CFO of the company, join us now. Gentlemen, morning to both of you. Kunal, I want to start with you. This growth that you've seen, right, it's almost a 30% growth that you've seen across your businesses, whether it's wiring harness, vision systems and polymer segments. Is this something that is sustainable in the, for the rest of the quarters in FY24?
Yeah, absolutely. I mean, if you look at our order book that we disclosed last quarter, it was $70 billion. So obviously we are going on that run rate. Hopefully, as the automotive market is still seeing growth, thankfully, and as that plays out and the 70 billion gets into execution, we should be seeing more growth going ahead.
Okay. If you look at the segmental wise breakup, right, the wiring harness business, I think for the first time you've seen double-digit margins there, 10.2%. What's going so right in this business? Have you managed to sort of get new clients on board? What is the order book situation like? And what kind of sustainable growth you see particularly for wiring harness?
Pankaj, you want to take that?
Yeah, so the teams probably have been doing well. So we have had lots of challenges, as you know, after COVID, and they have been kind of settled. So with the customers' trust, of course, new customer additions have taken place. Certain geographies in the past were hit due to sudden volume changes. That stabilization has taken place, and that's what results in better performance all across.
Okay. So, I'll come back to the business side of things in a bit, but I also, Pankaj, want to check a little bit with on what's happening with the debt situation. Because, the net debt has risen. It's now at about 8,300 crores versus about 7,500 crores last quarter. So on a quarter-on-quarter basis, it's a 12% rise that we've seen. So that is a bit of a troubling issue for the market. But you've given an explanation saying that there were some payouts of acquisitions that you had to make during Q1, etc. But do you plan to bring down the debt substantially at any point in time? And if yes, what could how much could the debt come down to in FY24?
Well, I think Kunal will add more to it, but sure. I would say that you see us as a very fast-growing company. We have already announced many acquisitions. So as we move forward, there may be debt, but when you look at our leverage, that's what we look at. So we have maintained our leverage, and what we are saying that going into the future also, while the leverage may go up for a short term to medium term, but then we again bring it back. So that's the kind of direction with which we move with a very growth-oriented company. Kunal, you may kindly add.
Kunal, you want to give us a number as how much you can bring down your debt by?
Look, I think there are many still volatilities around, so I don't want to second guess where we'll end on. But what is amply clear is we are on a deleveraging path when it comes to our organic set of the business. What you have seen currently as an expansion is on account of working capital, again, partly driven off the execution of the 70 billion order book, which requires us to do our engineering upfront, and hence those are lying in working capital right now. As the order starts into production, those will get sold off, and hence the working capital decline. So as we head towards the latter part of the year, you would see a decline in the net debt from the perspective of our organic business. What Pankaj was mentioning is on an absolute level, the debt will still increase because, as you know, we've announced 12 acquisition targets, 7 which have closed in the last few months. And those will start kicking in as we go ahead from both top line and bottom line perspective. And hence the leverage ratio, after considering all of those by the end of the year, give or take, should be in and around the current levels, give or take. We don't expect actually the peak leverage to go beyond 2x in spite of the last 12 acquisitions that we've announced.
Okay, so you're saying that the debt will rise further because of the acquisition costs, etc. But your net debt to equity, you're not going to go above the 2x level, right? I got that.
Net debt to EBITDA, just to be clear.
Net debt to EBITDA, okay. Now, I want to talk to you a little bit about the aerospace vertical. We were just having this chat with Baba Kalyani as well, and there's so much work that you folks are doing there. You've also started supplying new product ranges to the aerospace vertical. You've acquired Syrma as well to supply wiring harnesses there. But you haven't told us about the quantum of business. What is the opportunity size for you in aerospace, and what is the order book like?
Look, the order book from the time we acquired SimTools has grown more than 3x. And we will come back with more disclosures around this every 6 months. So next year or next quarter, you will hear more specifically on some of these newer verticals that we have. But it's extremely exciting times on the aerospace side. Syrma is a classic example of all the hard work the team has done. And we've been able to get this asset only at the behest of the customer. So this was completely asked by the OEM here to be able to go into this asset, looking at all the good work that we have done on the wiring harness side and the automotive space. So it's up our alley. It's an entry point, and then we start growing very, very significantly from here. Needless to say, India is a large market on the aircraft side now, and that is also helping us by being an Indian player to be able to capture much of the growth in India as well. It is on a significantly higher trajectory, let me put it this way, than the current growth that you're seeing at an aggregate level.
But can you give us some numbers? I mean, if you're saying that it's going to double or go up 3x, what is it at currently? And how much, say, by the end of FY25, what could the order visibility, the revenue visibility look like for this vertical, aerospace?
We'll come back, as I told you, we'll come back in the 6-month period when we talk about this more specifically.
Okay, got it. Pankaj, one thought from your end on the margins as well. I mean, you're almost at 9% margins on a consolidated basis. Is there scope to increase margins further? And if yes, what would the levers be?
See, it's been a very exciting time for all of us. And while the markets have stabilized, still there are certain challenges which are there, like wage costs and the higher interest costs. And we are all navigating through these challenges. So, of course, for all of us, it's very important that we focus on return on capital employed, and we continue to focus on that. But the whole direction for all of us is to move up and make ourselves better.
I just one quick question. I don't know, Pankaj, you want to take it? But I was reading that you guys have done some 7 acquisitions, since April of this year, right? So very, very prolific in that particular department. How is the integration of all of it coming together? If you can give us a quick sneak peek. And, I'm assuming you will start to consolidate all of this starting this quarter, that is Q2. What should we expect in terms of addition to overall numbers from these acquisitions?
Kunal, would you like to take that?
I think, a couple have been closed in this quarter. So in the current quarter, if you look at it, the revenue buildup is only actually 26 crores. Going forward, the larger one, SAS and Ichikoh, has been closed on July 31st. So you'll start seeing that traction come into second quarter. The aggregate revenue has been around about 1.1 billion historically. So that's what you would expect on a full year basis. Give or take, as we come into integrating these assets. It's relatively early days, as you said, from an integration perspective. July 31st, we're talking about 10 days since then. But overall, I think we've been happy with both how the industry trends are looking like for these assets, as well as the capabilities that these assets bring in. So the growth will actually not only feature in these respective assets itself, but the objective would be to leverage some of the capabilities that they have and make our existing products and capabilities even better. That would be the endeavor. So hence we're looking at a fairly synergistic level of growth coming through as we move through the year.
Sorry, you gave that 1.1 billion number. What is that, Kunal?
That's the top line of the acquisitions which have closed.
The total acquisition on an annual basis?
On an annualized basis. That has closed, the revenue mark of that. The gross revenue mark of this will be 5 billion.
And any more acquisitions that are lined up in the latter part of the calendar year? And if yes, what are you looking at in terms of either geographies or areas?
Look, I think we are in a very interesting position. There are very few suppliers which have a strong balance sheet like ourselves. as well as the capabilities of being a global supplier. And that is a unique position when you start thinking about all the volatilities that are there around the world. And hence, we get very favorably looked at by the customers who then ask us to find solutions for some of the troubled assets. So, Dr. Schneider was again a classic example of that nature. So in this, relatively volatile world where interest rates are peaking, inflations are peaking, the pain is obviously there, and we are seeing a great degree of traction around those. We remain fully engaged on the M&A side, and hopefully more will happen as we go through the year.
Okay, and we hope to hear from you very soon on that front. Thanks a lot, gentlemen, for joining us and speaking to CNBC TV 18.
Thank you.
That's
Thank you,
Samvardhan Motherson. Where the stock is up almost about 2% good expansion in terms of margins. Key businesses are doing well. But yes, the debt is rising because of acquisition costs, and that's something that may continue. Let's step into a quick break. On the other side of the break, Ashish Jain, the CFO at KRBL, will be joining in